Bitcoin's looking pretty bullish, and I did let YouTube viewers know that it's a possibility that the trend line below me was going to get the bounce. However, I did think it was improbable. However, it is what played out. So let's dissect this and figure out, is this a fake out to the upside before bad economic news that essentially came out on Wednesday, just yesterday? Is this a fake out to the upside before it heads down? And what exact level do we need to look at to start becoming short-term and micro time frame bearish once again? But as of now, even though I just said it like yesterday, the day before, there's no reason to be bullish, which there really wasn't. But now there's no reason to be bearish on the very, very small time frames. And I'm going to give exact levels on when you should flip trajectory. So let's get this Bitcoin. All right. Bitcoin's micro channel essentially superseded its macro channel. This ended up getting the bounce, something I had been highlighting in my last two YouTube videos, that the trend line made from the yearly lows of Bitcoin at 17.5 mixed with the next higher low in late June, early July. Here, I mentioned it could bounce, and I did not. I thought it was the third most likely, I think is what I said in that video, and the third most likely seems to be playing out. Also, something I mentioned, a reason why I thought it could play out, and it is playing out so far, was you had three beautiful strikes of bullish divergence on the 1 hour chart, and I went into great detail in that the 1 hour chart is not, I mean, it's fairly powerful, but if you get three strikes of bullish divergence on the 1 hour chart, that has the power of a 4 hour or 12 hour chart. I mean, it usually can do some pretty good damage to the upside. I mean, 18 to 20% moves up. And in a bull market, it just could be continuation to all-time highs, but this isn't a bull market. So you can see here that you have a low, higher low, but price made instead. Price went low, lower low, lower low. And so let's go there. And these are the things I covered for the bullish case, even though I thought it was improbable. Low, lower low, lower low. He had four strikes. Shit, look at that. Even a lower low and another higher low on the RSI. He had four strikes. Son of a gun. Whew. Wow. Yeah, that is playing out. The small term time frames are overpowering the greater trend right now. And the question is, so the questions we have here is, how long will the small term time frames continue dominating? When do we know that the small term time frames are succumbing to the larger trend? And I'm going to give you that level first. So let's talk about that first. I'm going to go ahead and I'm going to flash you my micro channel, which sounds funny. So this is my macro channel flashing, but I have my micro channel on right now. All right. I think that if you connected the wick high of June 15th, the wick high of June 26th, just connect those with the line, you'll have the top line of my point of control. As long as Bitcoin stays over that, so you could just you don't have to make it a nice channel, just connect those two wick highs and string it out. As long as Bitcoin is over that and doesn't use it as, so let's zoom into the very small time frames now. And essentially I'm using this line right here. As long as Bitcoin doesn't use this as resistance, which right now it's around 20K. So if Bitcoin can stay above or not specifically not use as resistance, whereabouts 20K to 20,200, that range. If this range is not used as resistance, then I would remain bullish for the short-term time frames. I do fully expect Bitcoin as a high possibility to come all the way down to 19.8, right? But that doesn't mean it's used this level as resistance yet. It would need to then go back above that area, right? So going below this, I would probably become a little bit more neutral, but I wouldn't be bearish yet. It would have to come up and then get rejected by something like this wick high of the CPI data release, pump before the dump, and then a pump. I would say something that it need to get back above that. That's about 20,100. So I could easily see a pullback just under 20K. It might be slightly more aggressive of a higher low, somewhere around 20,000, but this looks like a pretty reasonable area for a higher low. Is about 20K. So I want to be very clear with what I'm saying here is just because it goes under 20K, that's not a reason to flip bearish right away. As resistance specifically, I would say if you could see 5-minute candles bumping its head multiple times on a couple of oscillations of the 5-minute Stokes, so that would probably take a whole hour and a half to see, right? It's, one full oscillation probably takes about an hour chart. So if you see a couple oscillations on the 5-minute chart, use that area of resistance. That would probably be enough to start flipping bearish and just completely, because that would mean short-term time frames, which are bullish, would succumbing to the greater trend, which is down, and that would be unity across all time frames. Probably be pretty bearish at that point. So that would be my cutoff right now. Now let's look at how high can this go. Where or not how high it could go. I mean, hell, it could go straight for 30K. Who knows? But because I've already made a video on that too, why that area actually could make sense for a large. I've already covered that. However, it's not probable. But where could it go within reason, and what are the two most likely areas that you might start looking at? That's what we're going to cover next. If you haven't checked out my Discord, links to that are in the description section of videos, and I post some bomb charts on crypto and traditional markets on Twitter, Cosasverdes with the number 2. And if you want to lay up because you work too many hours a day to be in a community and do things on my time when I'm available, and you want recordings and multiple JPEG pictures showing you what to expect in the market, then you might want to check out the YouTube tiers. Hit the join button below any video, and another video pop up describing what we do for you. All right, here we go. So, how high is this going to go? I'm going to throw on the micro channel, because it looks way more obvious. So this is a macro channel. If I put on the 8-hour, you can see it goes back all the way to the 69K top, right? Macro channel. So anything over 6 months, I would call that pretty macro, right? So that was November, so that's like 8.5, 9 months ago. This is a macro channel. It's not giving the best guidance right now. It's not no rules were rules broken? Yeah, rule was broken. It did not use the bottom of the point of control as support. Almost did, but it came up shy. So it did break some rules, which means something superseded it, which you just have to hunt for it, but it's pretty easy. It's the micro channel, which is based on those lines I've been warning about that it could get the bounce. So zoom out on this guy. It's those two, the double trend line here at the bottom that I've been talking about, right? Back from the $17,500 big drop to the next higher low, to the next higher low. And I anticipated this would be a next higher low. It could get the bounce, right? And what I thought was more probable, though, is it would hit it, make a lower high, and then kind of come down because of the horrible economic news. But instead, it aggressively made higher highs and higher lows. Now, looking at this, let me get it on the 30-minute chart. You can see a little better. So looking at this, expand this just a tad. There we go. It looks a little clearer. What's where it would be most likely to slow down. It's already hit the bottom of the point of control, so it's possible that was it, and this was just a normal rally up to the point of control before you then fail it. It's possible. However, it kind of seems a little aggressive for that, and traditional markets had some pretty decent closures as well. Actually, I don't want to delete those two lines. A second, there we go. Put those lines back on there. This I feel this makes it a little bit more obvious. Okay, so it could be now around 20,950, where 20,900. The top of the point of control is 21.4, so I'll label that 21.4. And the reason why I would say this chart is going to, give the best possibilities of where it's going to slow down is because it superseded the macro channel. Like this is working, right? Now, could it just be because the 1 hour RSI gave big signals for money to buy? I don't know, but this trend line got it, right? Regardless of 4 strikes of bullish divergence on the 1 hour, which is strong. And the next pit stop up, so if you keep this trajectory, it aligns pretty closely with this horizontal that I've been stressing could easily come into play. it could easily come into play. These two wicks up here at the beginning of this formation, right? That's where you almost always get a pullback. Like regardless of whether you continue to the upside, you almost always get a pullback from that. Like most bullish case that would be fairly common is it goes above, it just consolidates there, then goes up, and I wouldn't consider that like a very big pullback. That could happen, but it would very, very likely slow down there, and for the potential of being a full-on reversal back to the downside and break down below. And I will label this around 23. Yeah, let's label it 23. Let's label it 23,150, right in the middle of that box. And these would be the two areas that I would keep my eye on. In addition to that line I said you might want to draw, as long as Bitcoin's over that, and right now that's coming in. So with more time, this is a descending line. So over time, this line will be less and less important, right? But for the next 48 hours, this line should work pretty well. As long as Bitcoin can stay above that line, connecting wick high, wick high, wick high. As long as it can stay above that, it'll likely be bullish. But these would be my two areas. Now let's look at traditional markets here. This kind of supports the idea of it's not slam dunk, but look at SPX or look at Nasdaq's closure. From the daily low, not the open or anything, but the low of the day, it bounced back and closed freaking 2.25% above. So it sold off at the beginning of the day, but it got bought up hard. And look at this gray line here, right? And I'm going to zoom out. Well, I am on the daily, so this might be zoomed out in some degree. Yeah. So look at this gray line. That's the same gray line. And it just closed above that. Look at that. For years, this gray line was resistance. It's the same line. Here, let's actually see how long this guy was resistance. Yeah, did you get one or two daily closures above here when it got rejected? Sure you did, but just in general, it was straight up resistance for a year, almost exactly. And then it spent a year doing nothing, using it as support, almost a year, fell below it, used it as resistance. But this is a big line. This is a very, very important line in the history of risk on stocks. And you just had a strong daily buyback that closed above that same line. So, and it was the tech stocks that were getting hurt a little bit more than S&P 500. It's had a strong closure above a very important line. And from the macro channel, that goes back to the top of this, run back in November, also, just kind of like Bitcoin. It's a 9-month-old channel. It has no immediate resistance, so it looks like it could easily come up to the top before it runs into resistance on this, and it just closed above resistance. So the traditional markets looks like they have some free reign, and it might just be tomorrow up, and then it all comes down because that Nasdaq just hits that top line tomorrow on a really bullish green day. So actually, here, let's go back to that. If that were to happen tomorrow, you could be looking for some major fake out type of stuff. Like it comes up and hits it and closes a little lower. So let's make that candle. And then the next day starts up and goes whoop, and then flips red like that. So you'd essentially have a day like this. And that happens a lot. It just actually happened. SPX, I think. So the red day could actually go higher. That is totally possible. So I would watch out for a play like that over the next 2 to 3 days. It might not just be a one green candle. It could be a small green candle, then another small green candle, and then the red one wicks up and then turns red. SPX just did this right here. Yeah. So on this line here, you had a big green candle, closed a little lower, and then the next red day went higher and then red and just straight down from there. So SPX literally just did this. And if I went on a smaller chart, I thought it was the top line it just did it on. Yes, it wasn't. It was that line. All right. And so traditional markets are supporting the idea that this could run a little higher regardless of bad economics. And I don't want to make any any hypotheses, because I've had a hurt my back, so I haven't been posting on Twitter much and all that stuff the last 48 hours because I haven't been feeling very great. But mostly lying my ass down in bed watching Star Trek and having my computer open, essentially. But I'm on Star Trek Voyager right now. But sorry, my dog is really bothering me. Actually, I don't even remember what I was going to say about that. I apologize. So this could run up quite a bit higher, and I would not be bearish until those conditions were met. This I guess I deleted roughly 20,000 to 20,200. If that area is used as resistance, not below it, then start being bearish. It has to be used as resistance specifically, not just going below. Until that point, I would remain in short-term time frame. All right, so let's. I'm going to move on to the questions here.